Hi everyone, welcome to another edition of Trading Success Podcast with Cam Buchanan. It's been a while since I've been here, but we've had a lot go on since our last trading podcast, or our last Trading Success podcast. So we've got a lot to cover off today. So today may be a little bit longer than normal. However, there's a lot to cover. All right. So let's start. First of all, let's just recap election day. And we did an all-day live trading room for the election day. So we started it on the Thursday morning, the day after the election. There's the results were coming through. We opened the room at 9 o'clock, and a lot of us traders caught that bullish run that proceeded all day long. And if we look at the charts, we can see from that day. I'll bring up the S&P 500 first of all. So let's have a look at that day of the election. So this was the day. It was here, the 7th of November. The 6th of November was the day. So we had a sell-off coming into the election. Then we had some balance, and then the market broke out. So this was the day. And then the following day, Thursday, we broke out, and then Friday kept going. So if we look at this is for the S&P 500. If we look at just the RTH data, so the regular trading hours data, we can see we've had this incredible, that was the day. And then we had this massive gap the next day. So obviously the Euro session rallied, and then the market gapped up and kept going. Asia and Euro rallied. So we've got this incredible imbalance at the moment. There's a lot of there's poor structure in the market, and you can see the imbalance zones have been filled out to the downside here. All right, so we had some imbalance on that day, and we've got this big gap here, all right, which is trying to be filled at the moment. So we're still a little bit of ways from filling that. I think the key number is that around about that 5,900 level, we found support down there on Friday. Now let's have a look at see what's happened today in today's trading. So that was Friday, the entire trading day. So the extended trading hours plus the regular trading hours. So you can see where we are trading today. So we've got a lot of imbalance to fill. You can see we're at the 50% of this entire imbalance zone. We're back into this old balance range that we had many, many weeks ago. So we're at a key point here. Are we going to see this market continue to rally high from here? Or are we going to continue this filling in this gap down through here, all right, this imbalance area, or this gap, which is down through here? So if we break under 5,900, I think the market will probably continue to go down and test at least the trend indicator here, and try and fill that imbalance zone there, or that gap there. So that's the S&P 500. So 5,900 is that key level to watch this week. Remember, the market's got fairly weak structure. So when we've got weak structure, the market will try and fill that area. So there hasn't been a lot of rebalancing in the market. We've just had big, strong rallies the week before, the election week, and then last week we had a little bit of a correction after all the euphoria of the Trump election win. So before we go into any more charts, what I want to talk to you is about what happened last week in terms of news. So on the week before, after the election, we had the Federal Reserve discussing interest rates. They kept the interest rate on hold at 4.75. The CPI remained at balance at 0.2, what they predicted, and the core CPI is at 0.3% as well. So everything remained unchanged. PPI also remained unchanged. This week in the news, we've got Chinese loan, so the 1 year and the 3 year prime rate come out. And then also we've got Friday this week, we've got Euro PMI, and then early Saturday morning, very late US for us, US open time, we've got the USA PMI. So that's really the only news we have this week. Not a lot there to discuss in terms of news. Let's have a look at the charts that have been really making news. Let's have a look at the NASDAQ, which is very similar to S&P 500. You can see we've made all-time highs during the election week, and then we've sold off last week as well. So you can see where we are in terms of this entire expanding range that we've got. We are back, or we tested the 61.8%, and today we're trading up around the 50% of that range. So the daily chart's very balanced. You can see we're still holding the trend indicators. So the trend overall is up, even though we are in what we call an expanding range on this time frame, which is the daily time frame. So I think this week what we want to see is that 20,500 is probably the key level for this NASDAQ. If we can hold above 20,500, nice round number, I think we're going to see a continuation of this rally. It's looking like it wants to continue to go up. However, once again, if we look at the regular trading hours timeframes, you can see we've got some big gaps. You can see we almost filled the gap on Friday here. So there's still a gap there. We filled that gap last week, and we've got this gap to the upside. So the market is very gappy, a little bit of volatility, but overall sentiment is still very strong, and we are looking for this rally into Christmas. Santa rally looks very, very strong. Let's have a look at some of the other markets we've been tracking over the last few months while we've been doing these podcasts. And I think the big prime mover has been obviously gold and Bitcoin. So let's have a look at Bitcoin, because Bitcoin did exactly what we were talking about. We've been waiting for a long, long time for this market to break out of this range. Now, if we look at the number of days, it was about, I'm looking at this time frame here, from the high to the low was about 145 days. All right, if anyone studies Gann, particularly how to profit from commodities, Gann talks about the 144 being a very powerful number, and also 12s, like obviously 144 is 12. So, 145 days, exactly, trading days, that this market did, 145 days, 101 trading days. And look what the market has done. It's made that low, and then the market has rallied from there. So very much a Gann number. And also even looking at the rally to the upside as well. When you look at these numbers, it's quite profound. Like if you look at the low to the high, 185 days, very powerful. Fractions of 30 is very, very powerful in Gann. So around 180 days was that rally. So we're basically 99 days into this rally now. Actually a little bit more than that now. Actually hit the 105 days now into this rally, and we're at 75 bars. So 75 trading days, and this market still looks like it wants to go up, and doesn't look like it's slowing down. It did slow down last week after the euphoria once again of the election victory by Donald Trump and the Republicans clean sweeping all the House and the Senate and the presidency, and the market loved that move. So we've got this market is fully extended, and hopefully some of you guys took heed of this technical analysis and started to buy when they saw the market holding above these levels. Right, once it got above this level, this was a really good opportunity to buy. Look at 65, around 65,000. The market failed there numerous times, setting up this floor in the market. It was also coming back to these prior tops as well. But the key ingredient for me, if you look at the weekly chart, what we could see here on the weekly chart was as soon as we started to make higher highs, higher lows, this market was showing that it was showing some strength. Whereas in this bearish or this retracement phase, the market was never making any higher highs or higher lows. It was making lower highs and lower lows. So it was bearish. And then we finally turned the tables and flipped. And then once we broke out, the market has rallied pretty hard. And you can see we're almost up to 100% extension, but we're also from this retracement here, we've extended out almost to 127%. All right. Actually, let's have a look where we are. The actual fact. Yeah, we're pretty close to that number. We're beyond 127%. All right. But in terms of that last big retracement down, the last move, you can see we're right up to the, you can see from that leg down, You can see we're at the 127. Well, sorry, the 200. We're at the 200 expansion of that last leg. If you look at this big push up here, the last really big push up before we had the retracement and the rally, you can see where we're failing. We're failing at this 127. All right. So basically it's finding resistance at these expansion zones. So whatever that leg was there, we've expanded 27% above that leg or that big swing up. And that's where the market's finding a little bit of resistance at the moment. But there's plenty of reasons for this market to continue to go up. You can see from the retracement down where we're up around we're very close, we're above the 144 actually. We're getting close to the 161 back up here, which is very close to 100,000. So I'd say we'll be very close to 100,000 soon. It's just really tricky to buy right now at these high prices because, are we going to get a pullback and another move to the upside? Like I said, the closer you could have bought to this trend line was the most ideal area to buy Bitcoin. And that was just during our annual conference, actually. Bitcoin really started to rally on that weekend. Let's have a look at gold. Gold's another interesting market. Let's have a look. Gold has sold off from its all-time highs. You can see we went down to, we got up to 2,800. And a lot of people were looking to sell the market up there. If we have a look at how far we've rallied, we are basically we're 2 weeks down here now. All right. So gold's getting into a position where it's very close to buying again, I'd say. If we can get 3 weeks down and then maybe a test of the trend indicator. All right. We tested 2,600 today, but if we can break and go down to 2,500, I think this is a really good buying zone around here. 2,500 or 2,550, somewhere around there is I think a really good place to look to get back into gold long term and just hold that into the year, because I think the commodities are going to, or particularly gold, I think it's going to be a really good commodity over the next few years. So I think it's handy. It is a long-term play. It's definitely not something, you'd be in and out very quickly. It's a longer-term play because I think gold's got a lot more room to go. Oil, I did have a long oil position. I've dumped that oil position. Oil's still looking a little bit bearish, even though we are finding some support down around 67. It's not really floating my boat at the moment. It is in an expanding type range, but it could be expanding downwards as well. So, oil, I'm going to wait for it to start to swing up on the weekly timeframes before I look to get back into long on oil. You can see oil is very much consolidating. I think there's better value in other products or better trading opportunities in other products out there at the moment. So we'll wait for oil to start to make higher highs and higher lows. You can see it's still making lower lows and higher lows. Sorry, lower highs. So it's still down in this shape here. Very much still looking pretty weak, really. That's kind of the shape it's looking at. So, it might even go back down and test 60,000. See how we get down here. You can see there's a lot of, if we look at I haven't got my liquidity zones here, but you can see this is the 4-hour chart. We've got a lot of liquidity zones that could get tested first. So let's see how these areas hold up. Another interesting play I want to look at, as well as I talked about this at conference, was the interest rate, the 10-year interest rate. So this is a great product, I think, to trade as well, because it's a micro product, very low margin. Doesn't cost a lot to hold overnight either. We are going back up to these, retesting these highs here, but this is the interest rate. Okay. So the government bond is being sold off. It's not very popular at the moment, and they're trying to attract this government bond with high yields, getting people to buy government bonds with high yields. So these yields look like they're continuing to rally. And I did mention at conference, they're likely probably going to get to 8% is an area to look at, because the reason why, because could get to 8%. I don't have enough data on this particular time on the futures, but if you look at this 10-year rate on a larger time frame, it's 8% is about 50% of a very longer term range. So I believe with higher inflation to come, I think after this big boom we have over the next couple of years, I think interest rates are going to continue to go higher and higher. And that will be devastating for a lot of people short term, particularly if you're borrowing a lot of money. But great if you're trading and if you're buying the interest or you're trading the interest rate yield, you can make good money off the interest rate. Last product to show will be, I'm going to show you my dollar. The dollar index has been interesting. Let's have a look. Now, the dollar is defying gravity at the moment. And you can see here, the dollar was starting to show weakness through here, but just over the last couple of weeks, the dollar has gone back up to 106. All right, so it is powering at the moment. So if you're trading the euro US dollar, the euro would be weakening compared to the DXY. So we are coming back up to these highs here. So I think this is looking like it's marking the range. So potentially we could see a turn off these highs here and back into the range. You can see how the dollar has been quite predictive over the last year. It's been pretty much in this range for the last year and a half, really, or even 2 years. It's been quite range bound. So, you know, you can see the dollar was back here in around COVID. The dollar was right back up at 114, but now it's back more around that 50% of that range. So this is something that I'll be looking at for a little bit of weakness in the dollar. I think there's a very good opportunity here, you know, to trade obviously the major currencies against that dollar. So probably 6E being the best one. It could see 6E start to rise if this dollar index weakens. So it's an important one to look at. Follow the DXY because it talks a lot about, explains a lot about what's happening in terms of the economy, and we are expecting the dollar to weaken, particularly as you know, as there's weakness or negativity in the economy. But we know it could take a long time for this to flush out because we are expecting a very bullish 2025 in the stock market and maybe even in 2026. But we're going to watch that very, very closely to see how the market reacts. But I'd be definitely watching those weekly charts on your indexes to see if we get any extended pullbacks on the weekly charts. At the moment, we've probably had 1 week down. If we go back at the weekly charts, let's have a look at the NASDAQ weekly. You know, this is the first time we've seen a really strong red candle. We haven't broken any of these lows yet. So we need to get under 20,000 to show any weakness here. And I just can't see that happening at the moment. Interesting to note, look where we found resistance up at the all-time highs, but right up at the 61.8 expansion of this last retracement swing down through here. So, you know, these fibs work incredibly well, just using those expansion clusters, provide great insight into potential reversal trades on all time frames. So it's a very, very powerful indicator, our swing analyzer tool. So guys, I think that's about wraps up the podcast for this week. What have we got coming up? We've got, what is this week? We've got a lot coming up this week. We've got our Trading Business School launch program coming up this week. We've also got loads of hub meetings, our final breakout Christmas party hub meetings on the 8th of December. There's a lot of those coming up. So make sure you also come to our trading, which one is it? So many events. Trader support webinar. We've got our trader support webinar on the first Thursday of the month. So put that down. That'll be the 5th of December, my dad's birthday. So that'll be a great event. And I think that's about it in terms of events. Oh, we've also got our intensives as well. So if you're getting back into your trading and you want to make the most of the new education and to get up to speed with the new education, and the new indicators as well. We've got the intensives on this Saturday as well, the 23rd of November. So if you're interested in that, please email us at info@idta.com.au so that we can get you enrolled for that intensive program, which is an all day. And hopefully the indicators should be launched. We're just doing some final testing on those as well. So all of our subscribers should have those indicators very, very soon. So that's something to look forward to. And also too, if you missed the conference and you want to catch up on what we talked about, you can order the conference recorded videotapes. You can order those. So we can send you out a link to those recordings. We'll also put a link in below on how you can access those as well. So make sure you're getting all of our emails and our what's ons. That has all the information also about recordings. But if you're not a member and you still want to catch the recordings, you can by just going if you go down to the notes below, you'll be able to download or click on that link, and that should be able to you should be able to purchase those recordings there. It was a great conference. It was so good to catch up with everyone again. And congratulations to all our award winners as well, and also our TBS 2024 graduates also. Have a great trading week. Remember, watch those key levels. So we've got 5,900 on the S&P 500. On the NASDAQ, you're looking at about 20,500. Look to see if we're going to get some continuation to the upside, or are we going to fill those imbalance zones, those gaps that still need to be filled, particularly on the S&P 500. I think NASDAQ filled its gap. So it'll be good to watch. NASDAQ has broken all-time highs. S&P's also broken all-time highs, but we are kind of struggling here. So a double top is in play on the bigger charts. But once again, just watch the volatility. It's going to be a great trading week, and not a lot of news as well. So we should be just free-flowing in the markets. Should be nice. Thanks, everyone, and we'll catch you next week. Bye for now.